So good to have you join us today. Hello and welcome to the program. I'm Lee Ji-yoon in Seoul. Coming up on today's edition of Business Daily. Korea's National Pension Service will invest nearly $9 billion in domestic stocks this year, which is expected to bolster the local stock market. Household debt is rapidly growing here in Korea, and some are estimating it to reach $1.3 trillion by the end of this year. We'll sit down with an expert to talk about this. Korea's State Pension Fund is planning to snap up billions of dollars worth of local stocks this year, a move that's expected to boost the domestic stock market. Our Kim Min-ji starts us off.
The National Pension Service is planning to invest some 10 trillion won, or roughly $8.8 billion into the local stock market this year. Speaking to Seoul-based Yonhap News, Kang Myeon-uk, the chief investment officer of the country's pension fund, said new funds worth roughly $44 billion are created every year, giving it enough room for both a cash injection and helping it to retain its current portfolio of all investments. If it goes as planned, the stock investments by the NPS would come to roughly 110 trillion won, or $96 billion. That's about 20% of its total assets, worth roughly 480 billion as of the end of November. The pension fund has been maintaining its stock exposure at about 20%. The officials said that while specific plans have yet to be determined, funds will be invested in both large cap and small and mid cap shares, adding that the MPS will also buy more shares of Samsung Electronics due to its strong performance last year. The fund held a 9% stake in Samsung Electronics as of the fourth quarter of last year. The NPS has a more than 5% stake in 285 companies in Korea and is a major shareholder in 58 affiliates of the nation's top 10 business groups. The announcement of the investment plan comes as the pension fund is facing its worst crisis ever. NPS chief Moon Young-pyo was arrested in December on suspicions that he ordered the fund to support the controversial merger of Samsung C&T and GL Industries in 2015 when he was a health minister. The deal was criticized for strengthening the founding family's control of Samsung Group at the cost of other shareholders. Investigators are also looking into whether support for the merger was given in exchange for contributions to two foundations controlled by President Park's confidant, Choi Soon-sil. Kim Min-ji, Business Daily.
Korea's number 2 chipmaker SK hynix is said to be looking into acquiring a stake in Toshiba's memory chip business. According to reports, the company submitted an initial bid last week worth somewhere between $1.7 billion and $2.6 billion. In January, Toshiba announced that it was planning to sell a 20% stake in its chip operations business for as much as 300 billion yen, or roughly $2.7 billion, to raise funds. If SK hynix were to win the bid, it would gain a competitive advantage in the NAND flash market. Now, it's unclear which companies are competing in the bid. While SK hynix said it cannot confirm details, Korea Exchange has requested that the chipmaker make a disclosure in regards to the issue. Korean automaker Kia Motors' eco-friendly commercial for this year's Super Bowl has been ranked the best in a USA Today survey. According to AdMeter, a tool created by the newspaper to evaluate public opinion on Super Bowl commercials, Kia's ad for its 2017 Niro featuring Melissa McCarthy topped the list with 7.47 points. All three of the top spots went to automakers, second going to Honda, and third to Audi. Now, this marks the second year in a row for a Korean automaker to win the best Super Bowl commercial following Hyundai Motors' celebrated ad in 2016. This year's viewership of the Super Bowl ranked the third highest in history with more than 111 million viewers. Out of the total cargo capacity for global containers transported in 2015, around a quarter came from empty containers. Now, the cost to move them reached nearly $7 billion. But a local research institute has found a way to drastically cut down expenses while maximizing space. Our Lee Ju-young has more.
A 2.6-meter high standard container is slowly being folded, and in less than 5 minutes becomes a quarter of its original size. After 3 years of research, the state-run Korea Railroad Research Institute and the Ministry of Land, Infrastructure and Transport have developed foldable containers, which will greatly help reduce the cost of shipping and storage of empty containers.
Korea has developed this technology used for foldable containers with the hopes of revolutionizing the logistics sector.
While countries like the Netherlands and the US have been one step ahead in developing this technology, commercialization has been an obstacle. The bending areas so far have not been strong enough to withstand the weight, and the time and cost required for production are also issues of concern. But Korea's containers have proven strong enough to withstand a total of 384 tons of weight, making it possible to stack on top of one another. This is good news for major logistics companies like CJ Korea Express that spend large amounts of money moving empty containers.
We had to spend a lot of money on transporting empty containers, but now I think we can drastically cut costs to about a fourth of what we used to spend.
The research institute behind the project says that Korean firms currently spend around $342 million each year on relocating or distributing empty boxes. But with this breakthrough, companies can cut costs by about 75% to roughly $82 million. On the global scale, with the introduction of such containers, companies can save a projected $5 billion annually. The government said it will continue to support the development of this new technology with the goal of commercializing operations by 2019. Lee Ju-young, Business Daily.
A growing number of Korean households are piling on debt, setting off alarm bells even louder this year. In fact, economists have warned that private household debt might grow to as much as 1,500 trillion won, or roughly 1.3 trillion US dollars at the end of this year, almost fourfold of Korea's annual budget. Take a look.
The number of heavily indebted households is on the rise. Estimates show that Korea's household debt this year could swell to a level of $68,000 per household and over $65,000 per person. Statistics Korea says the proportion of marginal households, those which have a debt-to-disposable income ratio of over 40%, jumped to nearly 15% in 2015 from 12.3% in 2012. And experts say potential interest rate changes both at home and abroad are likely to add to that burden. According to Korea Federation of Banks, the average rate for 10-year mortgage loans by the country's 5 major banks, Shinhan, KB국민, Uri, KB Hana, and NH, was up nearly 0.7 percentage point in December from a year earlier. Not only that, the U.S. Federal Reserve is expected to raise rates a few more times this year. So what should the Korean government do to keep a lid on its chronic household debt problem?
And to tell us more about this, Professor Yang Jun-suk from the Catholic University of Korea joins us in the studio today. So good to see you.
Happy to be here.
So there are concerns that average household debt is growing more rapidly than income. So at this point, we're wondering, how serious is Korea's household debt problem?
Okay, well, the Korea's household debt is about 165% of disposable income. Korea's average household disposable income rose about 2.4% last year, but the average household debt rose about 6.4%. So that is increasing rapidly, and obviously that has a lot of people worried because the debt is 165% of disposable income. That means households cannot pay the loan back with their annual earnings. Having said that, though, there is no hard fixed rule say that this is dangerous and this is not. As I mentioned, the Korean percentage is 165% of disposable income. The OECD average is 125. So we're over that. That's part of the reason why we're concerned. But then Canada has 175%.
Okay.
And Denmark and Netherlands have over 270%.
Wow.
So that's part of the reason why the Bank of Korea and the government officials are saying that they're concerned, but they don't think think it's at a dangerous level yet. Now, Korea's problem is a bit more complex. If you say look at countries like United States, most of their household debt is in form of, say, mortgages, where you have a very long-term loan, and every payment you make, you're not only paying the interest accrued for that particular month, but also part of the interest. So your debt is actually falling in the long term.
Right.
But in Korea, a lot of these loans are short-term or medium-term loans, and you're only paying the interest. So if you cannot roll over the loans, then you may have to repay the entire principal, and that will wipe a regular household out. So that's part of the reason why it's so dangerous in Korea.
Now, and also more people are borrowing from non-banking institutions, which suggests that the quality of household debt has worsened. So what could be the reason behind this?
Okay, well, the banks, because they charge relatively low interest rate, they've been charging somewhere between 3%, 4% range at the end of last year. And the non-banking sector, they're called savings banks, but they're legally not a bank. That's a very strange way of putting things, but that's how it is. But their interest rate is over 10%.
Wow.
And part of the reason why their interest rate is so high is because they expect the loans to be more dangerous. So if you're, say, a marginal household and you need to borrow money for your cost of living, and you have to go to a savings bank with that high interest, then you're liable to get stuck into a very negative type of feedback cycle where you have to pay a lot of interest, but you don't have a lot of income to deal with, so you're more liable to not pay back the loan and get into deeper trouble.
Now, we're also hearing that Korean households are bracing for higher interest rates.
Right. The interest rates started increasing at the latter half of last year because they expected the U.S. to increase their interest rate.
Right.
And it has accelerated somewhat in December and January. It rose in some places close to some banks 0.7% just within a period of slightly over a month. So it's increasing very quickly.
And that's obviously going to put more burden on indebted households, right?
Exactly.
All right. Well, now with the U.S. Fed potentially expected to raise rates about 3 times this year, how would that affect the Bank of Korea and its decision on interest rates then?
Okay. Well, it's usually thought that Korea cannot have a lower interest rate than the United States. Investment in Korea is more dangerous than investment in the United States, so you need to have some kind of a risk premium on the interest rate. So we need to have interest rates which are higher than the U.S.
Okay.
Right now, the U.S. interest rate is between, their policy interest rate is between 0.5 and 0.75%. Bank of Korea policy rate is 1.25%. If the United States goes as predicted and increases their interest rate 3 times, that'll mean an increase of 0.75% or more. That means the rate will be higher or about the same as Korea. So we expect in that case you would have a lot of capital outflow going from Korea to United States, and that if it takes place very quickly, then it could even lead up to a currency crisis. So we need to keep the interest rate somewhat higher, but the problem is it'll worsen the interest burden.
Right.
So Bank of Korea is really in a very hard place right now.
And going further from that, how would U.S. President Trump's new tax policies as well as proposed fiscal policies affect Korea's rates then?
Okay, most of Trump's policies are thought to be inflationary. So right now the U.S. is on a solid track for recovery. That's why the Fed has expected to raise the rates 3 times this year. But if President Trump does as he promised, which is cut tax, increase government spending on infrastructure, and install protectionist policies, those are all inflationary policies.
Okay.
So it might even increase, the Fed might decide that it needs to increase the interest rate even more. Now, there's a sort of a gray area here because policy rates are not the same as market rates. So we've seen Korean market rates rise more than policy rates in the last year. But still, there's a good possibility that the U.S., if it becomes very inflationary, they will raise the interest rate a lot more than expected.
So what's your outlook on Korea's household debt from here on out? And also, what kind of measures should be put forth in order to tackle this problem effectively?
Okay, well, if you look at the reason for household debt, I think there's three big reasons. One is the people who are marginal households, their cost of they're borrowing to live. And for those people, I don't think they should borrow at all. Because it's very doubtful that they'll be able to pay it back. They're going to places like savings banks with very high interest rate that they have no hope of paying back. So that should be replaced by a social safety net.
Okay.
And then the second component are small businessmen who want to start small businesses. So they're borrowing capital, but they're investing in things like chicken franchises, fried chicken franchises. And well, if they don't want to, if they have to pay back their interest, they have to make money first.
Right.
And they've not been able to do that very well. So in January, the government announced a lot of plans. It includes assisting these businesses on managerial skills, but I think there needs to be a lot more emphasis on that component. And then the third component is people who are borrowing money to invest in real estate. And those people actually are not that bad off.
Okay.
But there has been some concerns that the housing prices in Korea may fall and these people may go underwater like the United States subprime incident. Last year, I think this was Korea's big mistake. They said that the government will limit the supply of housing to keep their prices high. And because there's no other good investment, a lot of people borrowed money at the low interest rate and put it into the housing market, causing a housing bubble, and even a stronger increase in household debt. So I think we need to get away from the housing component, prepare for possible crisis, possibility of housing prices going underwater, but don't prop up the price of housing, prop up the banks if it happens, and then make an alternate bankruptcy arrangements for people who get into trouble because their housing is underwater.
All right. Thank you so much for your insight today.
Thank you.
And that brings us to the end. But we'll be back tomorrow with more of the day's top business stories, so don't forget to tune in then. Thanks for watching, and see you soon.